So that brings us to our first, kind of step. And doing that budget is really key, and it's a good exercise no matter what situation you're in. It's being able to look back the 12 months and really just see where is the money going? What's coming in, what's going out? So the first foundation of any financial plan is to have an emergency fund. So what is an emergency fund? So obviously, given in today's time, what if you were affected either by being laid off, or if we didn't have a stimulus check, or your company wasn't funded by the PPP loan. These are things, just everyday life happens. So there's going to be some kind of emergency at some point. Your car may need major overhauling of things that you need to have done, when of course you can't predict that when that's going to happen sometimes. Major appliance, some of these things, just like I said, life is going to happen. So that's kind of the preface of having an emergency fund and having that cushion, so that you're not having to go into debt to live. So what we want to do is help you understand how to create an emergency fund, what it is. So we know what it is. Let's look at it. I would recommend that you would put it into some kind of a savings account that is separate from your checking or other accounts that you're in all the time. Even a money market may give you a little bit more interest, but we want to call this, and Mary and I, through all the times that we work with clients, we try to, because financial planning can be very complex. So we really want to keep things very basic and understandable. Otherwise, sometimes if they're too complex, you won't do anything. So we talk in simple terms. So tonight you're going to hear us say buckets a lot. So this is your emergency bucket, and we want to call it untouchable. So once you figure out what that monthly expense is that you need monthly, what we want you to do is put that money in a savings or a money market and have at least 3 to 6 months of that savings. Okay, so that may not alarm you, or it may alarm you. So it may be a big number to you, or may not be. So if it is, we also want to do things in bite sizes. Again, just because you know what to do doesn't mean that you're going to overnight be able to do this. So what we suggest is taking, rule of thumb is, taking 10% of what your check is. So if you get a paycheck every payroll, maybe a good way, taking 10% of your net income. And if that number is still too high, then cut it. It's better than nothing. So, but a rule of thumb is about 10%, and put that into that account. So that would be step one.